Good morning, students. How are you all? We have completed 3 chapters in accountancy, isn't it? So today we are going to start the 4th chapter. So first of all, you take your textbook, notebook, everything, and keep open in front of you the 4th chapter. The page number may be different in your book. Okay, you take that. The chapter name is ledger. The third chapter is journal entry. From the journal entries, we have to post them to the ledger. So first you should know what is ledger account. We know something about account, isn't it? What is an account? So it is a summary of all the transactions related to that particular person or that item related to that account. Okay, that is called account, ledger account. Okay, because for example there is a cash account in the journal entry that I will state with the examples now. Okay, for example in the journal entry how we will write the first entry, cash commenced business with the cash account debtor to Sam's capital. Now we have to post this one in the ledger account. So this is called cash account. Now we will write in the account form. We have to use 2 pages. Okay, for the account we have to use both the pages. Cash account. Both the pages we have to use, and both this side, right side, we know we should draw a line, and here we will write creditor, here left side debtor. Then date, particulars, LF, here amount we have to write. Okay, both the column amount only. Here rupees. In the same way you have to write the left side also. Debtor, here date, particulars, LF, and amount, both the column together amount. Then rupees we have to write. Then how we will post this cash account, you have to see that. I will explain to you. Here this way will appear in the debit side to Sam's capital. If it is 5,000, we have to write in the outer column 5,000. Okay, so here again if we purchase something for cash, then what is the entry? Purchases account debtor to cash. Purchases debtor to cash. So here cash is credited. So on the credit side we will write by purchases. That date we have to write by purchases. If it is 3,000, we should write like this. Okay, in one account we will enter all the related transactions. We will post all the items that are related to that account. Here cash account, all the entries that we have prepared on a particular month, we have to post them date wise. Okay, date wise we will post them. So that this ledger account is called the principal account. Okay, the ledger account is called the principal account, main account, because we can come to a conclusion. That means all the summary of the transactions will be given. Here how much cash we have received, how much cash we have spent, we can see, isn't it? Then at last we can see what is the balance in that account, isn't it? That balance only will be taken to the trial balance. Okay, that we will learn after posting. So from the, this is called journal entry, isn't it? From the journal we will post them to the ledger. So this we can say posting in the ledger, that is we are writing the account, isn't it? Here cash account to Sam's Capital, we are posting this journal entry in the ledger account. Okay, here in the big business houses nowadays, they maintain all the accounts in the computer, isn't it? But in the olden days, it is a very big business concern, they will have a very big book. Okay, that is a bound book. You might have seen account book, no? Bound book having thousands of pages. They will keep. Then each one page will be given for one customer or supplier, one account. Okay, so that book. Otherwise, that loose leaf ledger also is possible. So they may insert the leaves with that spiral binding, no? That book will be that attaching paper also is allowed in the posting, or a big bound book they can use for the ledger account. Or nowadays what they use, they are using the computerized accounting, isn't it? So no need of keeping bound books. Instead, the only that journal entries we have to prepare. We have to give correct debit and correct credit. Then automatically it will be posted in account. Okay, automatically it will post in the cash account and Sam's Capital account. And once you open that account, it will show all the details and the net balance also we can find out. Okay, now we will learn the utilities. What is the meaning utilities? The benefits of ledger account. Okay, what are the uses of this ledger accounts? Here, quick information can be derived. Quick information of a particular account. If you open one account in a particular page, we can get many information, isn't it? In that particular month or on that particular date, how much we have received. If it is cash, how much cash we have received, how much we have spent, or the balance, the net cash available in hand. All these we can derive from that particular account. If it is purchases, so what we can get from the purchases account, how much purchases, credit purchases we have made, then how much cash purchases we have made. Okay, all these. Then if it is a creditors account or debtors account, how much we have received, how much we have paid, how much that customers, how much we have sold to them. All these we can, all the information can be collected from one account. Then the second point is control over business transactions. Here, all the business transactions can be entered in one place, isn't it? So they get the information regarding how much they have the cash balance, how much they have received, or from the debtors, how much amount we need to collect, isn't it? Or how much amount we need to pay to our creditors or the suppliers. So they, the management or the owners, they can have control over the business transactions. How much they have to pay, whether they are able to pay, or whether the customers are ready, whether if we have more debtors amount, due amount, then they will take some steps to arrange for the collection of those dues, isn't it? So they could take some control or steps to for taking some action regarding any account. So they could have some control over the business transactions. Otherwise, if it is not entered in the ledger account, what they cannot get your net information, isn't it? So okay, we do not know how much amount the customers have to give for us. Otherwise, how much we need to pay to our creditors. But if we know by seeing only that customer's account personally, then we can take some steps to arrange for the collection of dues or for the payment of dues to the creditors. Okay. Then the third point is trial balance can be prepared. That we know, isn't it? The next step is trial balance. So after preparing the ledger accounts, all the balances from the ledger account, cash account, that balancing I will teach you how to do. So after balancing, the opening balance will be there. That balance will be written in the trial balance. Each account's balance will be written separately, either on the credit side or debit side. If it is a debit balance, we have to write in the debit side. That we will learn later. So from this ledger account only, trial balance will be prepared. Because trial balance is the basis to prepare the financial statements. Then the last utility is helps to prepare financial statements. Financial statements, we know what are the financial statements: trading account, profit and loss account, and balance sheet, isn't it? So this can be prepared only with the trial balance. That trial balance is prepared from the ledger account. That is why we learn trial balance is prepared and it is helping to prepare the financial statement. Okay, now I have shown the format of ledger account, isn't it? I have shown you the cash account, no, simple ledger account. You have to use both the pages, right side page and left side page. Here that date, particulars, LF, amount column. In the same way, left side also. Okay, date column, we need to write the date. Date we have to write. We know how to write, isn't it? First year, then month, then date, 1 or 2. Like that they will write. Either they may balance the account either daily or weekly or once in 2 weeks or monthly. As per the wish of the organization, they will balance the account. Okay, but usually they may do the posting as and when the transaction completes, or daily they will complete. Only then the daily they can get the the information from the accounts. So date will be entered. Then the way of posting I have taught you, isn't it? Cash account data to Sam's Capital. We are preparing cash account. So you have to see in the journal entry what is done with the cash. Cash is debited, isn't it? So debit side you have to write the other entry. To post the other entry. See, to Sam's Capital account. Okay. Now we will learn one more theory portion. Then I will teach you how to prepare the journal entry. Journal entries, both we will learn together. This is the next step. Without journal entries, we cannot post them. We cannot prepare ledger account. So we will prepare some journal entries and we will see the posting also. Okay, now we will learn the next heading. Difference between journal and ledger. Differences between journal entry and ledger. ledger journal. Here, first the basis. In that basis, first one, recording. When we will record. Here, journal entries will be recorded as and when they are occurred. Okay. When the one transaction occur, we will enter the journal entries. As and when they occur, we will enter. Here, posting may be done daily or weekly. Then once in 2 weeks, that called fortnightly. Okay, fortnightly or monthly. As per the wish of the organization, they will do. Okay, recording takes place whenever the transaction takes place. Here, ledger is done. They are recording in the ledger either daily or weekly or fortnightly or monthly as per their convenience. Okay. Then next one, stage of recording. It is the initial stage, isn't it? Journal entry. Passing journal entry is the initial stage, or we can say it is the first stage. Ledger is the posting in the ledger or recording in the ledger is the second stage. Okay. Then order of recording. Which order we will enter the journal entries? In chronological order, isn't it? We know what is the meaning of chronological order? Order of occurrence. That means date wise. Today something occur, we will enter all the journal entries, prepare the journal entries on the date wise, chronological order, occurrence of the transactions. Okay, but how we post them, in which order? Account wise. We are posting them in account wise. Cash account, we will enter all the cash accounts. Related to cash, we will enter in the cash account. Then our salary means expenses, we will enter that one. So in that order, account wise order, we will prepare ledger accounts, but journal entries are made on the basis of chronological order. Then process. We know the process of preparing journal entry is called journalizing, isn't it? That is the first process of accounting we have learned. Preparing journal entry is called journalizing. Then process of recording the journal entries in the ledger is called posting. Okay. Preparing the journal entry, that is the first process. Recording the journal and preparing journal entry is called journalizing, and the process of recording the journal entries in the ledger is called posting. Okay. Then facilitating the preparation of trial balance. Here we cannot prepare the trial balance. Okay, cannot prepare trial balance. Trial balance cannot be prepared from the details of the journal entries, but from the ledger account balance only we will prepare the trial balance. Okay, we can prepare trial balance from the balances of ledger accounts. Then what is the basis for this accounts. For journal, what is the basis? All the transaction or the source documents. What are the source documents? All the evidences. Okay, any voucher or bank pay-in slip for any expenses, salary paid, that salary, that bill will be there or voucher will be there, then cash receipt. Okay, all these are the source documents as the basis. But for posting in the ledger, what is the basis? Journal entries are the basis. Okay, journal entries are the basis for preparing preparing ledger accounts. Okay, then the last one, net position. Net position of an account cannot be found out in the journal. Okay, cannot be found out. But net position can be found out from the ledger account. What is its effect? How much balance we have? So the net effect can be found out in the ledger account. Okay. Now we will learn the procedure for preparing ledger account. Procedure, when we do the problems, I will explain to you. Okay, the first illustration I will teach you. I will read the first illustration for you. Okay. Illustration 1. Past journal entries for the following transactions and post them in the ledger accounts. 2017 June 1. Basu started business with cash, purchased furniture by paying cash, purchased machinery on credit from Harish, bought goods for cash, paid insurance premium. Okay, journal entries we will see in the book itself. Posting only I will do in the notebook. Okay, just see first in the books of Basu, then journal entries, 5 columns they have made. Then first one, 2017, then June, number 1. Basu started business with cash. We know very well what are the 2 accounts involved here, cash and that capital, isn't it? That Basu's capital. So cash account debtor to Basu's capital account. Then started business with the cash, 50,000 return. Okay. Then purchased furniture by paying cash. Here purchased furniture should not write as purchases. Here we are purchasing an asset, so we should write the furniture account and cash. Furniture is coming in, cash is going out. So furniture account debtor to cash. Furniture bought for cash, amount written. Then purchased machinery on credit from Harish. Here no cash. So we purchase machinery, so we should write machinery account debtor. 2. We do not pay cash but for credit. So that from whom we are purchasing, that is the giver, isn't it? To Harish account. Machinery account debtor to Harish account. Machinery bought on credit from Harish. Then bought goods for cash, 4,000. Paid insurance premium for this one. Bought goods for cash. Here bought goods only purchases. So that is an expense we have to debit. Then cash is going out, we should credit. Okay. Then paid insurance premium. Don't write insurance 1, premium 1. Together 1. Okay. Then we pay cash. So that is understood. Okay. Don't write one word from there. Okay. Insurance premium is an expense. We pay cash. So it is an expense. We should debit insurance premium. Cash going out, we should credit cash. Okay, everything is written. Now we will post them in the ledger account. First one, that first account. What is the first account? Cash account we will open. So as I said you, we need to use both the pages. Okay, but I cannot show both the pages at a time. Okay. So I will show both each page separately. Okay. Get to amount column. Here one like LF, then date. That is given in your book, isn't it? To amount column, one LF. Here not LF, I will tell you what it is. So first you have to write cash account. Both the pages you have to take, okay. Cash account. Now here creditor. Here first debtor. Then date, particulars. Here JF. Okay, JF. That means journal folio. Okay, here we will write from which page of the journal entry we are posting here. Okay, that is JF. In this, each page number will be there in the ledger account. This page number will be written in the entries, the LF column, no? There they will post. So easily they can identify where it is posted. Okay, easily they can find out the page number of that ledger account. So when we post in the ledger account only, we will write there the ledger, that is LF, okay, ledger folio. We will write the page number there, and here also that journal entries page number we will enter here. Then to amount column, anything to add we can write, otherwise we will write in the outer column. Okay, amount. Usually we will write the rupees. Simple. The same way write on the credit side also. Credit side, date, particulars, JF, then amount together, then rupees. Sometimes even if you don't write amount also, no problem. Okay. Now we will post them. First in the journal entry, what is there? Cash account, isn't it? Cash account debtor 50,000. Then, so which side we have to post? In the debit side of the cash account. How we should write? To Basu's capital. Okay, to Basu's capital. Here date we should write first. 2017 June 1 to Basu's capital. Account 50,000 we should write the amount. Okay, then next cash, where it cash available, cash account, all the entry must be posted. Okay, so here see cash is credited, cash is credited. So on the credit side we have to enter in the cash account. Credit side, how we should write? First we should write the date. Okay, 2017 June 4. By credit side we should use that word by. Debit side to. Okay, buy furniture. The other word, the cash we should not write. Instead we should write the other one. Buy furniture account 6,000. Okay, then third one, no cash. Fourth one, cash available. Cash is credited, isn't it? So now you write only the date 10. How we should post? By purchases. Purchases account 4,000. Any other cash? Yes. One more cash. credit only. So credit side, date you write first 18 by insurance premium, account 100. Okay, 100 where you write not below 4, the only 3 digits, accordingly you have to write. Okay, now we have posted all the cash items. Okay, then like this all the accounts must be prepared. Okay, cash account. Next, Basu's capital account must be prepared. Okay, like this all the accounts must be prepared. I think you might have understood now, isn't it? I will show in the book itself. See, Basu's capital is credited, isn't it? So, credit side, how it is written? By cash account, date, and by cash account, the amount is written, isn't it? Then furniture. Furniture is what? Furniture account debtor to cash, isn't it? So, furniture account to date to cash, 6,000. Then machinery, same thing, credit purchase, isn't it? So, to Harish. Then Harish account by machinery. Then purchases account to cash. Okay, purchases to cash. Then insurance premium account debtor to cash. Okay, now you know the posting. Here I think I will ask you to do one problem, one exercise. Journalize the following transactions and post them to ledger. Started business with the cash 10,000, paid into bank 5,000, purchased goods from Ram for cash 1,000. Prepare journal entries for these 3 and post them in the ledger. Okay, ledger account, here cash account, then capital account, bank account, then purchased goods means purchases, then cash. Already cash we have prepared, isn't it? So totally 4 accounts you have to prepare. Okay, can you do this one? I will mark and give the question answers. What is a ledger? What is a ledger? Here the first one. Okay, ledger account is a summary statement of all the transactions up to the net effect. Okay, then next, leaving the next line, another one line is there. Ledger is known as principal book of accounts. That one also you mark. Okay. Then the last line, ledger accounts are prepared based on journal entries. Okay. In your page it will be different. Okay, in your book. What is meant by posting? Under the heading procedure for posting. Okay, this procedure for posting. Here the first line, the process of transferring the debit and credit items from the journal to the ledger is called posting. That you mark. Okay. Second question. Balancing and all we have not done. Then distinguish between journal and ledger. That one heading I have taught you. That one fully you mark. Okay. 3 mark, or sometimes they will ask for uh, 5 mark also. Okay. Mark that one. Roman number 3 1. Okay. Then what is ledger and explain its utilities. Ledger already we learned in the first what is ledger, isn't it? That one you mark. Then all the utilities, 4 types of utilities we learned, isn't it? That one you mark. How is posting made from the journal to the ledger? That one. Now procedure for posting. I have taught you how to post. The same thing is given in the procedure. Okay. Okay, then next one, that procedure for balancing, that we have not learned. Okay, students. So you might have understood ledger. This one, if you do all the problems, no, it is very easy. We can complete that lesson very fast. Okay. Thank you, students.